Today in the grain market, we see everything maybe a little bit easier. Soybeans, especially, there was just no news to just add to support for the futures right now. So we did give back a little bit of our gains that we had on Friday. It seems kind of interesting that the somewhat bearish report on Friday really didn't send the market lower. So that just tells me that perhaps it was a little bit oversold going into the report. But traders now are still digesting that report right now. The positive is that the support levels have held in spite of that there has been more fund liquidation. So that's one thing to look at. We're really we were able to hold basically the summer lows. So I think that that's something to look for. And those summer lows were back in April. We were 1240. 2 3/4, and in June 1240 and a half. So we were able to hang on to that, and the market has kind of moved up from there. So even though we had a little bit of a sell-off today, I think that that's positive. The CVOL now is down 3% to 20.6, which is kind of a surprise. I think that it just says that the market's kind of relaxing here. The soybean oil is at 32.4, the meal at 20.4%. So they also came down. The November implied volatility is down 2% to 18.77. That's the first time we've been below 20% in quite a while. I think that's just saying that we're kind of holding and waiting for harvest to begin and start to get some of our yield numbers, acreage numbers, those kind of things right now. But there is some hope. There was a couple of block trades today. One in the 700 contracts traded in the 1580 call. So that's a positive that options are still trading towards the upside and kind of leaning towards the upside. So we'll see if that kind of bears out. Now, corn did slip as well. That tropical storm in the Gulf is really starting to slow some of the recovery. The futures did give back some of Friday's gains as well, but I think that the harvest pressure has kind of moved corn just a little bit sideways, and I think everyone's kind of scratching their head thinking about where they want to go from here. Right now, the CVOL for corn is at 32.3%, so above 30%, which is still pretty high historically. So I think that just says that there's still a lot of interest in the market, but we need something to really spark the buyers to kind of come on in. December volatility is at 24.8%. The March is at 23%. So they're still relatively strong in general. That $5 super support level is still there, and it has held. So that's a real positive. Now, wheat was steady. The futures did show some weakness following those USDA's numbers, but we didn't extend Friday's low. So that's one positive, but we are still well below that $7 support level that we thought that was going to hang on. It just seemed like the market just kind of slid right through $7 without a problem. But technically, the trends are sideways, even though it kind of looks like it's a downways. But the trends are sideways for Chicago and for Kansas City, and the trend is actually up for Minneapolis wheat. So go figure on that one. So that just means that there's a little bit of a mixed bag or mixed idea on which way these markets are going. I think that the CVOL is down now 2% in wheat, and that just means everything's kind of slowing a little bit, and it's at 24.8%. So we're off to a little bit of a slow start this week, but perhaps we'll get a little bit of a turnaround tomorrow on Tuesday.